What's going on, everybody? I'm Susu. Welcome to the show. It's an absolute pleasure having you. Last video, we talked about Mr. Investor Pro and how he actually has no secret at all, and it's super basic to do whatever he does. It's a single indicator in your account that actually has a default setting. Means all you have to do is just find it, click the one button, and then you'll have all the information that he has and has been telling you he's a high net worth man of bullshit. All right, so check this out. If you actually look at what he's using, there's a better way to use that. And what I mean by that is, if you want to take risky bets on these nasty stocks that barely move in Chinese made shit, low volume, which is already super dangerous, as you see a lot of his stuff has downward for a long time. It has only short pops, but the downward's awfully long. You can look at CLOS, you can look at KXIN, you can look at CCCL. All of it is really bad stuff that's just going down. I think one of his that he's been pushing lately is Aveo, and we're not going to stay on him anymore because, again, I don't want to waste my time on. Look at his, like he was promising how the huge news is going to come. It's because, look, see right here, he just waits for these to get tapped. And the reason why he pushes it, because if you actually look, it's a beneficial thing for him because, look, he's just waiting for the touch to the Bollinger Band right there. And then he gets in and he gets these pops. And then he sells when he gets out of the Bollinger Band. And then right here, look, it comes down, touches the Bollinger Band so he can get in here. He waits for it to level out. You know, that's a smart thing to do. I do that too. If it breaks through the Bollinger Bands, I still want to wait for it to level out. Right here's a good example of it. So right here, it pops out of the Bollinger Bands here, but it's not level. It's still falling. So he waits for it to actually come and level. Once it levels, he starts buying in here. And then, of course, boom. And then here again, it comes down, touches there, gets up, boom. And it's just a smart way to convince new people that you have some kind of secret when you don't have anything. It's a single indicator that's a default setting. But let's look at how you could actually use this, taking risk, but a lot less of it, and get good gains too. So in the stock market, you have options, and options are something a lot of people don't learn because they get scared about them because they lose money when they try to play them, because they literally try to play options with no plan at all. They just go in and go, I like the stock, so I like the options. No. Horrible mistake in options. In addition, a lot of people buy options around earnings and they say, oh, well, it's going to earn. And if options move a lot because, if options move because the price goes up, then at earnings, they'll go up the most. Not true. For instance, Facebook had a massive move the other day, up and then down, right? Initially and after hours, it went up 17, it went up to like 215, 200, something ridiculous. And then it just started collapsing back down to its normal traditional 20, I think it was like 207, 208, and then it ends up staying there in the morning, bounces around for a bit. At market open, even though it was up like $4, it was nothing. It was losing. So if you had calls, which if it goes up, it's supposed to be more valuable, your calls were down like 50%. At market opening, when the stock was up $4, your calls were still down 50%. Because before earnings, there's something called IV, or it's actually your implied volatility. Let's look at XOM real quick, which has got earnings still coming up. They have earnings on when? Let's take a look. So their earnings are on August 2nd. So that means if we look at August 2nd options, you'll notice that there's implied volatility that causes an increase or premium in the value right here. Go to August 2nd. Look at how much they're trading for. All right, so let's look at the 70. We got 74.50 puts, 74. I mean, look at this. It doesn't seem like a big deal, right? It doesn't seem, but look, that implied volatility, 21.88, that's actually a lot higher than the traditional amount that it would have. Unless it doesn't have a big move. If no one's anticipating, look at the implied volatility, 5, because it's end of the ropes and there's no earnings or anything. The implied volatility is 5. I mean, yes, it's the last day, so they don't expect it to move much, but I bet you any amount of money, XOM probably never drifts too far from like 12 because it's such a stable stock. It's oil, for God's sakes. But on Facebook, it can be like 100. Some implied volatilities go up to like 400, especially like biotechs where they're expecting an approval on a drug. It will be so crazy because they're expecting massive moves in it, right? Well, so that's a no-go. I would suggest never playing the earnings either. Play after earnings. And let me show you why. So if you play the Bollinger Bands, the same thing that's supposed to be the secret that Mr. Investor Pro was trying to convince you it's a secret of the world. And I don't know, I won't be able to defend myself if he rebuttals because he blocked me. But one thing I do want you guys to know is that look at this real quick. Looking at this, I'm going to show you right now. If you were to play just the Bollinger Bands, options, meaning you bet the opposite direction of where the Bollinger Bands get broken. So if the Bollinger Bands break and you bet the opposite direction, let's take a look at what would have happened. Remember, you're betting for 1 day only. You're betting the moment it breaks the Bollinger Bands, like the day it goes up through it, you're betting the opposite direction and selling it when you're profitable or the next day. Here we go. We're starting back now on a 6-month chart. So right here, you would have lost money. Popped out of the Bollinger Bands there, and then boom. But was that earnings? Because if it's earnings, Bollinger Bands aren't nearly as effective. That's what killed us on Johnson & Johnson. All right, now watch this. After earnings, so a little bit time goes by right here. Pops out. Look at that dip. Boom. So you got about 400% return right there. How'd that happen? But look what happens. All of this, nothing. You'd be losing. So let's say the first one you bet 200, you would have lost all 200. The second one you bet 200, you would have made 600 profit approximately because of the size of the drop. Let's say you just took the 100% profit, so you're at 400 now. So you lost 200, you made 200. All right, so you're still even. The next one, you bet here, you lose, and then the next one it pops out, you bet here, you win. Boom. So you get your 100% again, because remember, these are like $4 drops. Yeah, these are like $4 or $5 drops, every one of them, which are hundreds of percent move. All right, here we go. The next time pops out this day right here. You bet for the next day. Man, if you would have held, you'd have like a 3,000, 4,000% return over a week. Right there, look at that. So there, your 200 just turned to like $3,000, $4,000 right there. Boom. Now you just stick with it anyway. See, I'm not investing any more than the 2 to 400 now. All right, so it breaks out here. You bet for it, 200. There, it goes up like $4. Now you got another 200%. So you add this 400 to the like $2,000 you made. And so far you've lost about 500, $600. So you're up like 2,000. All right. So right here, you're going to miss the whole thing because it doesn't break out of the Bollinger Bands, doesn't give you a signal. Too bad. You missed it. All right. But all the way up here, and then look what it does. Pops out of the Bollinger Bands there and goes down. And as we know, that's where it's at right now. So look at that for a second and tell me how crazy that is. Now, if you go to Bristol Myers Squibb, this is the last one we're going to show you. This is the same principle he's using. If it goes out of the Bollinger Bands, the top, you sell it. If it goes out of the bottom, you buy it, right? Same principle here. It's BMY, Bristol Myers Squibb. Let's look at the 6-month. All right, so if it goes out of the top, you buy puts for 1 day or 2 days. And if it goes out of the bottom, you buy calls for 1 day, 2 days, however you want to do it, but short term. All right, so here we go. We're going 6 months here. Let's redo that and get this thing out of the way. Delete this. Let's go over here and get this out of the way so that we don't have that big square. All right, here we go. All right, let's start right here. All right, out of the Bollinger Bands right there, massive drop. That's like $4 drop. About $2.50 drop. It's almost $3 drop. So you're looking at a couple 100% right there. Boom. All right, right here, goes out, you lose. If you do it the very first time it goes out right there and you get scared and you don't hold it till it actually drops, you lose. Because you're going to go here, then it's going to have its massive drop. Let's say you did it there. Let's say you're like, you know what? I'm waiting for the big pop out. Like, I'm just going to wait for it to keep going out until it drops. And let's say you waited for it to go all the way out and then start to reverse, then bet against it. Big win. Is that hard to do? Yeah, of course. But let's say you're just reacting to the very first pop. Here we go. Pops out right there. Huge return. Right there. Hundreds of percent. In fact, that hundreds of percent would lead you right into the next play where it pops out and then another hundreds of percent play. Boom. Just like that. Right into the next time it pops out, hundreds of percent play because it goes up dollars. Until the next time it goes out, right there, hundreds of percent. Until the next time it goes out, 100%. Until the next time it goes out, which is when I played it the other day, hundreds of percent. I played it here, and I got a big ass return off that one. I played it here, and I got like a 20% return, and then played it again yesterday and got a 62% return that I cashed out today. So I'm playing small amounts. But the point is, consistently winning on small amounts is still winning big because you're getting the 30-40. You're not getting 2% on 1,000. You're getting actually like, you're not getting 2 to 3% on 1,000 or 5,000. What you're getting is 60% on 200. You're getting 150% on, 90. You're getting 20% on 600. And so all of that stuff tends to add up. I'm not getting cocky or anything here. I'm totally humble. I'm trying to tell you guys, there's not some magic. some guy isn't telling you this stuff and just knowing where it's going to go so it goes. He's literally just waiting for a buy signal, sell signal on a single indicator. And it's something that works very good with the market, but this is the craziest part that he didn't tell you because he doesn't know this. What I'm about to tell you, he doesn't even know this himself. This is like total crazy shit right here. All right. If you ever, this is the secret. In the video, I'm going to tell you there's a secret to this stuff. This is the secret. If you figure out how to watch multiple time frames at the same time, which literally requires you going like this. So let's say you put a stock, let's say you're doing Facebook, right? Facebook, which we played the other day. All right. Let's say you're doing Facebook. And when you're doing Facebook, you're watching multiple time frames, which literally requires you not talking to anyone, no posting to stock twits, nothing. You're just focused in the morning. As soon as the market opens, you're literally going like this, back and forth, watching it. You have your Robinhood account open, which I traded my options out of Robinhood, and you have it open and you're ready. Like you already have in Robinhood account and you have the options that you're looking for selected. So if you're like looking like this, like I would be looking right here, and you're saying, okay, I want to go. I'm looking at the 1 day. Let's say we're going to have to look at the 5 day for this. And this is why, because yesterday was earnings and yesterday was the big move. It was earnings being reported. And this is where both things happen at the same time. Watch. So you're waiting and the market's opening. You see Facebook's at like 208, 209 pre-market, pouncing up 209, coming back down to 207.50, and you're watching it. What you do is you go there and you say, okay, how much are, because it's closer to the top range. Look on the 1 month. You see on the 1 month right there, it's closer to the top range. Because of that, right there, actually that very small spot, that's a crack on the Bollinger Band, the top band on the 1 month chart. When that's about to happen, obviously you're going to want to bet against it. So you're watching the puts, not the calls. The calls still could have made some money that morning. They could have made great money that morning because the initial drop out of the Bollinger Bands drove it up like $2 or $3. But this is the thing. You'd be watching the top because it's the top Bollinger Band on the 1 month chart where the break already happened. So you're now looking for the 1-2 punch. The 2 punch is the break on the top of the Bollinger Band on the 1 day. This is what happens when they both align. There's your 1 month, boom. You're going back and forth watching. Now you see the 1 day. In this case again, it'd be we're going back to yesterday, which would be Thursday. Market opens and look what happens. Right there. It breaks out of the Bollinger Band. That boom. Goes to 208, like 208.50. That, my friends, is a sign to just go for it. Like, just take your $200 and just risk it. I'm telling you, risk it. And you might have to do it a couple times because it may not be every single time that it works, but risk it this time. Risk it the next time. You already play penny stocks. You play these disgusting stocks. You put 1,000, 2,000 into them. It's easy to lose 20% in those. Take the 20% you would lose in them and risk it here. I'm telling you. Look what happened. Boom, breaks on the 1 day. And then you get boom at the same exact time. You're getting the break on the 1 month. All you have to do is literally click between time frames. You're just going 1 month. And yesterday it would have been the 1 day. But we have to go to 5 day because it was yesterday. And look at the drop that came after that. Look at that. That is from 208 all the way down to 198. I mean, right there is 198. That is a 1,400% move. That is right here, options trading for 18 cents, the 200 puts for 18 cents, and then trading right here down here at $3.60 at some point. That's actually like a 2,000% move, literally, almost exactly. I'm telling you, this is the 1-2 punch. When you see that, that is when you know. Here's another one. Look at Bristol Myers Squibb, because this is what he was telling you how, oh yeah, I just know when they're going to go up. No, I'm telling you, there's a thing he doesn't even know. But look right here. You had the touchdown right there the other day. That's where the touch happened on the 1 month. Boom. And then yesterday, got to go to the 5 day to look at it. As soon as it broke out, look what it did. Look at that right there. Boom. Barely gets out. Look at that. Bam. Boom. Oversold. Everyone buys covering like crazy. Right there. Boom. $45 calls. Had you had the gonads to go with, if you would have did any calls, 43, 44, you would have made hundreds of %. But if you had the gonads to go with the $45 calls, they were trading for $2 when this happened. $2. They were trading for $73 about an hour and a half later, 2 hours later. Over 3,000% return, 3,500% return in no time. So take your $100 and do this. You would have got 50 contracts, even if you got it for 5 cents. Forget the $2, get it for $5. They would say 5 cents. Buy it then. Still get 20 of them. And then just a few hours later, they're trading for what? $73. That's 70. I mean, just think about that. $100 gets turned into a lot of money very fast. I mean, you're talking about thousands of dollars. And the most important thing to remember is it was a small risk, but at the right time. And so what he and other people are trying to convince you of a lot of the time is that they have some kind of signaling that their team puts together. Don't follow me 20. He's another guy who acts like he has his team, but they're taking pictures of a screen using a busted ass system. I'm like, bro, you're literally sitting in a house with the most busted system. Like, look at my shit. High tech, got cameras, we got OBS software, we got fantastic audio. We're using the iPhone right here in front of you. Oh, you live your life when you trade, half the time it's happening right here. But these guys are trying to convince you they have a team. What team do you need? It blows my mind because I can't believe people fall for it. But what ends up happening is if you find out how to tap these at just the right time, these plays can be the biggest gainers of all. And with the little bit of risk, you might see a guy on YouTube all the time. He has stuff that comes up because I post investment videos, stock videos. I see his stuff all the time. They assume I guess I want to see it. But one of the things he says is, I put a couple $100 in the stock market and turn it into 500 to 1,000 all the time. He is doing exactly what I'm trying to show you how to do. The difference between me and him is he has more money that he's willing to lose than me, and he's more experienced than me. So when he sees these things, there is no question about how well does it work. I'm actually just finding out this stuff within the last month and a half, 2 months myself. So there are countless times when I could have acted but wasn't sure yet and didn't. And it ended up being a 400, 500% gain, sometimes 1,000. So the point is that don't ever think, I'm never trying to be cocky. Never ever would I be cocky with you guys. I swear to you from the bottom of my heart that I'm looking out for you guys because I see these slimy ass people trying to convince you that there's some secret knowledge out there that only certain people have. Now, don't get me wrong. There's only one thing that some of these people say is true. And that some things cannot be taught. Like the whole going back and forth cannot be taught. Last but not least, I should say this because this cannot be taught. This is just being very smart. Like you just have to be a smart person to figure this out. But for instance, if you look at some of them, you'll be like, dude, it's always outside of the Bollinger Bands, or it's never right. Or look at how far it's off the middle band. You have to be smart in knowing that if you force this thing to match those lines, that is not some fake thing that you did. You did not fake, oh, well, he just changed it till it matched. No. By guessing it, you build the thresholds. For instance, MU, which is micron, you can't use the settings, the default settings of 2 and 20. Watch this. If you change it to 3 and 9, look what happens. Boom. It's not magic. It is literally finding the right thing. You bring the threshold down until it matches your chart, and then what you do is you go looking through it. Now, if we looked at the last one, guess what you'd see? Oh, it's in and out of the charts the whole time. It's like the Bollinger Bands don't work. It's because you need to change the setting and bring it tight to the algorithms that are running on this thing that has a whole different set of algorithms. And the algorithms that are running for Micron do not match the algorithms that are running for Facebook or Apple. You need to know the right ones so that you can build your threshold. Once you have your threshold, look what happens. Now we can go through Micron and you'll find out that Micron barely ever breaks out of its Bollinger Bands. Look, it almost never does. See right here? But what you come to find out about Micron is when it does touch it. See right here? Right there? See how it touches it? It just barely comes out. Look, you could barely see it. But look at the drop that came afterwards. That means you're onto something. Look right here. Comes up, barely touches it. And it does drop, even though it's not a huge drop. Right here. Barely touches it. And come on. If I was to show the other ones, this thing would be, the Bollinger Bands would be like right here. and it'd be out the whole time. And you're like, dude, the Bollinger Bands are liars. Look at it, it looks like two people. But it'd be like, Bollinger Bands are liars. They don't work. It's not effective. No, it's so effective. You just don't know how to do it. So what you have to do is learn how. See right here? Look right here. Another touch. And then it comes down. You would have won. Another touch. And this is actually breakout. See the difference? One is just barely touching it. And the other one's actually going through the line. Look at the power of one compared to the other. This one barely goes down, but it's still profitable. This one's a big drop and is very profitable, okay? And leads to an even bigger drop, okay? And when you go down, look what happens. You find out that only a couple times does it actually come out and not work. Like that one right there, it popped out and you would have lost money, but remember how many times you would have made it. And now you'd see why it would have been safe to bet for it. Because if it's not touching the top, then it's not oversold. Only one time. Right here, it was oversold there and it came back down that day. I mean, you know what I'm saying? That day you'd be profitable if it touched that line and then you bet against it that day. You're profitable for about 30%. If you bet against it right at the moment it touches it, then you're profitable at about, 10 to 30%. You'd make 10 to 30%. So don't let anybody tell you they have some secret. They do not. In fact, I'm going to be totally honest with you. I know this video was a bit long. The secret that I just gave you, or whatever, it's not a secret, but the information I just now gave you showing you the trick with the Bollinger Bands is so hard to find that I don't believe you could even search the internet and have somebody explain it that easy. Like, dude, you actually have to force it to match. So in other words, you could find any stock, right? Just go, you like this, pick Goldman Sachs. Matter of fact, let's go to Shopify, because you know how Shopify doesn't seem like it works? Like the Bollinger Bands don't seem like they work for it, right? You go to shop and you'll be like, hey man, the Bollinger Bands never work for this thing. Like it's out of it all the time. Actually, but look, it does. If you change it to the other setting of 2, so if you go to 2 and 20, look what happens. We're going to go here. We're going to take a 3-month shot so we can get more in there. Look at it. My gosh, like you'd be like, bro, your Bollinger Band thing is the biggest lie the world's ever told, dude. I tried to bet against it. I'm getting slaughtered the whole time. And then the next time I tried to bet against it, when it went out, it went up again. And I tried again and it went up again. Like you'd think I'm just a lying fool. It's here, okay. But you'd be like, man, like you're getting me killed. I'm losing all my money. Well, my advice to you would be, hey buddy, you got to change your Bollinger Band settings. Because if it's wrong all the time, it's actually because you have the wrong settings, okay? 2 and 20 is my favorite. I keep it there all the time, but I do adjust it when I have to. Now look what happens. Look at that. So you're only getting, look at it does right there, it breaks out. But actually that day, look, when it went to the top and broke out, it actually closed down. And then went even lower the next day. So from there to there, you're profitable. Now watch this. Goes up, comes down. Look right there. Comes out right there. Boom, you're profitable. Right here, goes out. It actually goes lower the next day. You're profitable. The other thing is you could just say, dude, it's down here. I'm not betting against it. I'm going to bet for it. Look at how much space it has to run. Look at how much space is between that and the top Bollinger. Like when you come here, it's way out there, right? It's way out there. So you're like, boom, I'm betting against it. Then right here, when it comes down low, you're like, dude, look at all the space up here. I'm betting for it. I mean, seriously, like it doesn't have to be just betting against it. I'm just trying to show you guys basically when you go and you see it come out, you go the opposite direction. Again, when it goes out here, you could say, well, look, the next day it was green and it didn't. Well, no, but from there to there, how much of a difference is that? That's 340 to 325. Dude, that's almost that's like 335 to 325. That's a $10, dude. That's like a $250, $300 profit. Like, you know what I'm saying? Options, that's a huge profit. That's a $10 difference. You're talking about hundreds of percent in profit. And look at how perfect the chart looked the whole time. It almost never lied to you once. These settings don't change. What I'm showing you right now is exactly what you would have saw then in time. So like if you're looking at the 1 month, 3 months ago, you would have saw this happening. Like on the 1 month, if you would have looked in July, June 30th, 1 month ago, you would have saw that happening. But instead the Bollinger Bands would have been like this, going up, like you wouldn't have seen obviously anything on the back end here, but you would have saw this, and then you would have saw that, and you would have saw the Bollinger Bands pop out of the top of them, And then that day you could have went like this and went to the 1 day and saw something like that happening right there. Right there. But it would have been popping out, like the Bollinger Bands would have been here and it would have popped above it. So that's what I'm saying, is all that stuff is the same thing you see back then. I'm just showing you the long version of it, 3 months out. So I hope you guys understand what I just showed you, is that you have to learn how to fish. You have to learn how to fish. And you have to learn how to play other things than just bet again. You can't just, I'm going to buy stocks. If you're going to do that, then just buy long term, buy mutual funds and get out of the market and let it just grow forever. If you're trying to be a trader and trade good stuff, then you have to know these things, because you have to know when to buy stuff. It's the only true thing that Mr. Investor Pro ever said, was that the entry is the most important. The reason why he always said that was because his entries were always when the Bollinger Band came out of the bottom and signaled oversold. And so he entered it. That's what you guys can do too. And all it is a single setting. I already showed you how to use the Bollinger Bands. In the last one, I showed you the same thing. When it pops out of the top in the very beginning of the day, just bet the other way. And I showed you how Apple, it was literally boom, boom, boom. Every single day, 5 days in a row, nonstop, wasn't wrong once. Again, it will be wrong sometimes. But if you just saw what I showed you, if you're patient and you're waiting and you're watching 30 different stocks on 30 different stocks, you're going to get 100 different opportunities. Even if the opportunities are a day or this or that apart, you'll get 100 a month. And from those, you can go, I'm only doing the extreme ones. Like the last thing I'll point out is Save. When I looked at Save the other day, that's a super extreme one. Look at that. It popped way out. So yesterday I bought this thing. At the end of the day, right there, I bought the $45 calls. I mean, look at that. How could I not? How can I not do that? It was so crazy. But oh wait, hold on. I got the settings wrong. Because for this one I didn't use. Remember, you got to find which one. For this one, the setting was 2 and 20. Watch. You're going to see how you know it's 2 and 20. You're going to see right now. Watch this. Boom. Do you see how perfect it is? Look. Look at how perfect it is. See how it goes right to it, then wants to turn? See how it goes right to it, and then it's a huge drop from earnings? See how when it went way out, when it's out, don't ever just buy it because it's out. You have to let it keep going out. And the way you do it is once it goes out on the 1 month, you go to the 1 day. Yesterday, it would have been the 1 day right here. And you just let it keep going. And what you would have saw was, look right there, it's barely coming out of the Bollinger Bands on the 1 day. The one that yesterday you would be looking at the 1 day and you'd see, yeah, it's way out on the 1 month. But on the 1 day, it's not going out of the Bollinger Bands. It's just falling, and then it go close to them, and then go like this, and then fall more, and then like this, and then fall more. When you see that, don't buy it. I waited till the end of the day as long as I possibly could at like 3:55 before I saw it almost touching them, and then I bought them. I bought my calls. And the reason why was because right there, and then right here, you can actually see the perfect. So a friend of mine was still invested in long after I sold it. I took a 27% gain. He stayed in for 82. That's my boy, greener days. So I buy here and then I sell right there. It's like 43 when the market opens. It's like 43. And then I sold for my 27%. But then I was telling him all day, dude, watch this line. Don't worry about the 1 day. Don't worry about anything. Watch that line. If it goes anywhere near that line, sell it. And he did right up here. Boom. He did a beautiful job. It was an amazing play. Made $650 like that in like a couple hours. But right there, that's what he was going for. I remember you see a lot of people doing $100,000 and they're trading $30,000 a day and they're happy about $1,000. He traded what? Like, $1,200? Less than that, $1,100, $1,000 at most. And he made $650 because he played it perfectly. And then he didn't try to break through that. Once he saw that, and I told him, dude, watch that line, sell it on that line. He listened, he did it, and he benefited from it. And it was just a beautiful play. And that's what I'm trying to say to you guys is you got those guys that follow me, they learn, they watch, they talk to me about every single thing. We talk about everything. And it's because they're trying to learn how to fish. They don't want to be sold fish. They're trying to learn how to do it. So guys, this is hopefully unbelievably helpful. If you're not fully understanding what I just showed you, then ask me questions and I'll show you more. But keep in mind, I can't do this like 10 more times. Watch the video again. See if you understand what I'm saying. You're manipulating the Bollinger Bands until it fits your thing. Keep changing it until basically you want to see where only 1 or 2 come out. If your Bollinger Bands show that the thing's running outside of the Bollinger Bands for 3 weeks in a row, your Bollinger Bands for that stock are set up wrong. Maybe you need to write down the settings for that one and say, for this one it's 3 and 9, for this one it's 7 and 12, for this one it's 2 and 20, for this one's it's 10 and 16 or 10 and 23. You have to learn what the settings are, figure it out, like the deviation and the period. You have to figure out what those are, and then from there, well, it'll never be 10 and 23, but it might be like 3 and 23. So what you'll do is set it from there, and then you have to shrink it down until, or expand it out until only now and then, one pops out, and then it goes in the opposite direction. So once you have it to where it can go like this, pop out once and reverse to the opposite direction, you have accurate settings. If your thing's running outside of the Bollinger Bands for 4 days straight and then pops way out and then reverses, your Bollinger Band setting's wrong. Your Bollinger Band settings don't match that algorithm, that set of algorithms. They don't match the people that are behind the production of the price of that stock. And that's the best I can tell you. I hope you guys find this stuff useful. It's very key information. I want you to be profitable. I want you to be successful. So I give you this information for free. All I ask is that you subscribe, share, love it, and hit the little notification button so whenever I make one, you do one, because I want YouTube to pay me a shitload of money so no one else has to. All right, love you guys. Peace.